Hey, welcome everybody. This is John. Let's do a quick sound check. Good morning, good morning. Andy, Bill, good morning, guys. Sonia, good morning. Arthur, Chuck, and where is, let's see. Dave came out to see me this weekend, and he's not here this morning. It was nice to go out to, California is really nice to go to. It's kind of the West Coast. However, this past weekend I gave a presentation to the AAII chapter in Costa Mesa. A bunch of great people, nice people. A lot of people concerned about the market in the last year and a half of this wild topsy-turvy market. While we haven't gotten every trade right, we've gotten a majority of them more right than wrong. And most of the analysis that we've been using has been identifying both seasonal and identifying strengths in the different various sectors, which is what you see here, and also as well as looking at a few other things. Last 2 weeks ago, we were in New York City at the Traders Expo, and this week's weekly observation will be a slight delayed. It's about 90% done. I just got to go through and add some things like stocks to look at, bearish, bullish, that thing type of thing. Go back, since it's it really is kind of an irrelevant point, since we were talking about being in puts last week in the S&Ps due to that report that we not only discussed in depth and detail in New York, but also came back and gave it to our community of traders here in the room, and that is right here, called the Commitment of Traders Report. The COT, it hit, and we noted that several weeks ago, a couple of our students said, hey, what is that, now that the market's getting lofty, what is that COT data suggests? And we'll get into that in just a minute. It suggested that it wasn't as bearish yet, and then we would be needing to track it. And I always love to give credit to who asked those questions, but as the days, hours, and weeks go by, I always forget. So it was either Craig, or it was Clayton, or it would just been a few of you guys, which are, you know, very good students of ours. So with that said, what am I looking for in the market? Well, it's going to go back to studying, and I know we have a lot of people here that are new today. Welcome. And we have some visitors, like I see Bruce Sheffield. Bruce, welcome back. Good to see your name, and a few other familiar names. So what do I see in the market? Well, in order to figure out where our market might go, let's ask ourselves where the market has been. By the way, I do send out tweets on different trades and things, but many of you may not know what the heck this was all about. I'll just take a quick moment for a rant, if I may. So I'm flying from Costa Mesa. There was a little bit of a problem, medical emergency. Guy had, no joke, heartburn, and they thought it was a heart attack, and so they used the medical equipment. And so when he got off the plane, he said, no, I'm fine, and he walked off with his family and the grandkids, and everything was fine. Meanwhile, they have to replace that equipment. So our flight leaving California was delayed by approximately 3 hours, and I had a layover in Dallas. And so I said, if I have to get stuck somewhere, no offense to Texans, I'd much rather get stuck in Costa Mesa, Southern California, than Dallas Airport. That's a fact. The weather was nicer, the food's, you know, a lot of restaurants around. So in any event, the long and the short of it is, they said, no, sir, this plane that you're on, stay in your seat. It is your connecting flight. It gets to Dallas, and then it's going to Palm Beach. Just don't worry about it. I should have known. When anyone says don't worry about it, that's when you start worrying. And I believed them. So we get to Dallas, and sure enough, we decided to change planes. But we got good news for you. We're going to hook you up in a hotel, give you a travel voucher to get to the hotel, and then we're going to give you a meal voucher for dinner. So, if I may, the funny thing is, this is the dinner voucher for $12, and it was at the Gaylord Texan, which is like the Gaylord Palms in Orlando, where we speak at the Orlando Money Show. A Coca-Cola was, with tax and tip, $4.80. So that, you know, when American Airlines tells people that they're going to hook them up and do them right, I'm not sure on what planet $12 covers dinner, but maybe a Happy Meal at McDonald's. but certainly that was kind of an interesting aspect. But anyway, that's my tweet, that's my rant, and I apologize for that. But I thought I'd explain myself. Every once in a while, I'll send something interesting out, funny, a rant. Here's the Commitment of Traders report. If you click on that tools up there on our website, and I want to just share with you, if you get report, what we need to kind of look at, and what we don't see when you look at a report in terms of indicator basis, right? And what do I mean by that? All right, so this is an indicator, and this shows the net. This shows the net position. Small speculators are green. Large speculators, the hedge funds, are blue, and the commercials are red. So when we take a look at this, you go, wow, the only one net long this market pretty much are the small speculators. And they're long by a pretty large amount. I mean, you know, if we take that level, which is around 227,000, 228,000, if I drew a black line, we'd say, well, what does that number look like relative to past areas when the market was, when they were long? And as you can kind of tell here, the hedge funds were long, the funds were long, that is, and the small speculators were long. But you know, it was really before that seasonal decline that we saw going into October, which we were also looking at a bearish divergence in the AD lines. We had volume preceding significant moves lower. So we were looking for maybe a 2 to 6% correction on the outside 6%. Last week we went through in detail what would where would prices be if we saw per se an average pricing from not that I'm going to give that the small speculators long from the high. They're probably long from a reasonable area between 2080 and 2110, somewhere in there. So we split the difference and started to say, well, what would get a small speculator out of the market? At what point do you start saying, you know, the pain threshold to getting stopped out? So from approximately that 2110, let's call it 2105, we saw almost a 2% correction last week, right? So we've hit one objective, and now I'd have to say, well, what if we go down at what price levels is about a 3% correction, right? And when we apply our pivots over that, we note that the monthly pivot point, which is where the market stopped, interestingly enough, and we see that the market did stop at that level. So this was, if that is a minimum objective, it's time to cover. If you bought put options, it was time to take something off the table. Next, I think that, you know, do you just jump in and buy? No, because unless we form an equal and opposite, which means an equal and opposite is kind of like this, where the market moves lower and then the next day moves higher and then has that little follow through. And I don't think we're going to see an equal and opposite quite yet. But definitely what I'm looking for is more of the market to support against also this level near this 2060 handle, which is this area of old, as you can clearly see. I'll get rid of all the quarterly pivots and the monthly pivots. I'm just looking for the market to maybe support against these old highs. That's old resistance turns into new support. So we have a pricing action that was back in January. We have pricing action that was near back in December, right? And if we take a look at the charts on a cash basis, so we'll look at the spiders real quick. One of the things I like to do is not to look at just the futures, because a lot of times the futures between the rollover, number one, number two, the differences in the pricing of the market, and you can kind of see that on the cash market, we're not quite at that level. So we have a little bit more to go, which would be to test that level successfully, we would need to see the market maybe dip down and test into this level. I'm more trusting of the market getting near in the cash market, the S&Ps, between 204.5 up to 20, let's say 206, somewhere in that range there for this week. If the market comes down into that level, and then look for a light volume sell-off, then I'm going to say, you know what, guys, this is not time to throw the baby in the bathwater out, and the correction might be over, because it did meet our expectations of a correction based on one thing, which I'll share with you right now. We'll get back to this commitment of traders report, because it has a lot to do with the way we see things. So if we take a look at this figure, the open interest, you'll see that it's 3,449,000. Actually, open interest even rose a little bit last week. If we take a fact from that, this information is as of Tuesday's close. Remember, the market didn't really break down until like late Thursday and then Friday, where the market really got walloped, right? So what we saw is that this is darn close to that 2-to-1 ratio of net long, or long versus short, which leaves the small speculator net long. So they loaded the boat an additional 27,000 contracts, whereas the hedge funds are, if you take a look at this percent of positions, 13.4 long, 13.2 short. That's net neutral. That's net neutral. So the hedge funds, while they may have a slight bias to the long side, as I'm pointing out, they're virtually neutral, and they move quickly. So with that said, the small speculators upped the ante by Tuesday's close. And if we go back in time and we take a look at the third, which the market was at 2105. So look at last week and prior, look at Monday from the prior Tuesday's levels. You note that they added a bunch of longs somewhere in this price range. So the best they could have bought was 20.98, and the worst they could have bought was 21.15. So if you take it right down the middle, you figure they're in from around 21.08. I'll give them the benefit of the doubt and say they averaged in probably around 21.05. All right. So from 21.05 to Friday's area low, I mean, we are definitely near a 2% correction. So, let's watch to see how the market this week, or even today, respects if we do try to see any type of weakness. I think we're going to support, and that the correction should be over if we get down and we hold this 2060 area. That's what I would be looking for on a light volume. So here's the next piece to the puzzle I'm looking at. So we got to see who was in control of the market. Well, over time, the small specs were building up a net long position. The hedge funds were getting out of their net long positions, and it was between the specs and the commercials, and the battle was probably, as you can tell, won by the commercials, and the small speculators took a little bit a coal in their stockings, or a lump in the head, so to speak. But that doesn't mean that they're wrong. It just means they may be underfinanced. The sell-off, in my opinion, the sell-off in the market, it was a little bit on very light volume. The advanced decline analysis does not suggest a complete market meltdown. In fact, as we turn to our weekly analysis, while granted we do show on the S&P futures a quasi 3-candle pattern called an evening star formation, it could, at the end of the week, be negated if the market gets back up near last week's opening range, meaning we form one of these equal and opposites. Volume last week, in accordance to our analysis, was also very light for that type of sell-off. The advanced decline just measured right against a longer-term moving average in the S&Ps. What the advanced decline measures, if you're not familiar with this is an exclusive one that we created for the S&P 500. It shows the advancing stocks versus declining on a cumulative basis on a weekly time period. As you can see, it's, while the pattern looks a little toppy in the S&Ps relative to the trend, and I'd have to go back and get this. What I'm saying is, while we do see a little bit of topping formation, as you can see, this thing is, you know, been in a trend, and it's starting to go from straight parallelic type of market environment to it seems to be maybe basing out. The fact that from a seasonal perspective that during this time of year we get that Ides of March, but you know, remember, between now and say May is a really strong leg up for certain sectors of the market. So what's my take? I think that we're going to see the market may have overreacted a bit with the unemployment report suggesting the Federal Reserve here in the U.S. will raise rates sooner rather than later. Is it going to be a quarter point or a half a point? Number one. Number two, if the Fed raises rates, what sectors would that affect in the market? Well, obviously utilities was a little overblown to the downside. Bond prices got hit heavy. The dollar surged, causing gold prices to go down. But we didn't see that massive downturn in crude oil that one would expect. And that might be because crude oil is still significantly respecting its seasonal time frame in this point. So when we take a look at specific names, and I will share with you our here we go, are the results of our scans. The funny thing is that when I look at how many stocks in the S&Ps were sold off, and the first thing that I look at is how many stocks. This has been a bit good gauge why I created this. It's called the JP. Some scans that I like to look at. How many stocks in the S&P 500 are above the 10-day moving average? Now, about 3 weeks ago, we had something in the vicinity of over 400 of the stocks contained in the S&P 500 were above the 10-day moving average, and that suggests very overbought. Next, today, based on Friday's price action, how many stocks are above their 10-day moving average? It might be hard to see, but it's right down here. I just minimized this chart for you. Only 77 names in the E-mini, listen to me, in the S&P 500 are above their 10-day moving average. 77 names. That came in quite significantly. All right? So we go down one more and say, what about the 20-day? Well, the 20-day I recalibrated to look at the NYSE, every stock, and it's about half. 3,100 of the stocks, 7,000 stocks listed, nearly half are below their 20-day moving average. And that, my friends, is a slight bit of oversold market condition. So with that said, I look at these numbers, and so there's the balance. Above 50 days, 44.60. So we still see longer-term numbers looking bullish, and the shorter term is a little oversold. So looking at a couple indicators here, I can't say that I'm getting ready to get extremely bearish. What I would like to suggest is that I think that we have some names that we can look at for this week, especially in the stock trading community world. And unfortunately, when you take a look at a week like last week, how many stocks generated a weekly buy signal? Well, Bristol Myers, ironically, had some news that came out last week. Bristol Myers is in a buy mode, but it's a stock that I wouldn't be chasing here. It's not the greatest seasonality. DaVita, Green Mountain Coffee Roasters. Now, Green Mountain Coffee Roasters is kind of a stock that I'm not thinking is going to see a tremendous upside, because we haven't seen very strong weekly volume, but we did form several weeks ago what we call a weekly high close doji, and last week we formed a buy signal. So what I would be looking at for this week, if we do see some inherent short-term weakness in the market, one of the names that I'll be looking at for a pullback to maybe we got a little strong ahead of a game, and then we can see a pullback coming both near the weekly moving averages and the monthly pivot near 121, 122. Now, that would be a nice little pullback. So what I would like to see with GMCR, Green Mountain Coffee Roasters, right? I think one of the things that you note here, not that seasonality works all the time, but we do see on a weekly basis a time frame where it does have a tendency to move up this time of year. We have a short-term high closed doji and a short-term PPS buy signal on Green Mountain Coffee Roasters. So we have several ways that we would look for a buy setup here. Number one, it's been in a little downtrend. It kind of, if I move this up here and get this into better focus for you, I just drew an average of the highs. I don't like to draw an exact line of exact highs. I like to take the average of highs. And if you take a look at the average of highs, I mean, so this high, that high, the assortment, if I combine the average of these highs, it's probably between that high and that high. It's right in there. So you just pick a spot, and then notice that it pretty much hugs 1, 2, 3, 4, almost five different time periods down the line. So it has a more corresponding effect of that overhead resistance level. So the market broke out, it generated a buy signal, it might pull back, and on that pullback, so it'd be like kind of like this, folks. If this low swing here and that high swing there is AB, and you have a small little pullback down into the 122 handle this week, right? Then I would look for a short-term buy signal to move to the upside, possibly into the quarterly pivot resistance, which was approximately 140, okay? That blue line right there. And after all, Green Mountain Coffee Roasters in January was trading at that level. So from a realistic standpoint, I'm not saying that it's going to get there in the next 2 weeks. I'm saying let's look for Green Mountain Coffee Roasters, which has good seasonality. It did not generate good volume, but the volume structure on a weekly basis has moved more positive. So what I want to look for, Green Mountain Coffee Roaster, a stock to watch for this week. This will be on my bullish list this week, but it doesn't mean buy it today. It means let's look for a pullback. Let's look for a pullback and what the reaction is down at that 122. On another side of the flip side of this is, well, John, what if it explodes and takes off? Well, this is the last conditional change candle. And this is something we teach specifically to that course that we put out in the PPS and the momentum breakout. So this right there, that last conditional change, a close over that candle's high, which is 133.76. So if I do not, repeat, do not get the pullback I'm looking for, but the market closes and breaks out above this high, then I have an increase of probability that the market is going to resume the longer-term uptrend. Now, some people, what I'm excited about this pattern that is staring us in the face is that some people might view this as a head and shoulders top in the making. Meaning, this is the neckline, this could be the potential shoulder, this is the head, and it could be forming the shoulder before our very eyes. So, head and shoulders tops are very powerful, but they're not a top until you break and close below the neckline. So you can't look at this as a head and shoulders. It might be there, but it's not a head and shoulders, especially, I would say, the likelihood of it manifesting into a head and shoulders, the odds are shaved down due to the seasonality that this stock has strong tendencies to rally this time of year. So that, for me, especially as it goes into the end of May. So as you can see from a seasonal trend trading tool, it has a strong tendency to move up this time of year. So if people think that that's a head and shoulders top and they get short or get out and it rallies, right? If it rallies, there's going to be a lot of potential stops above maybe that swing high and people getting out of a short position or chasing it because they don't own it. So Green Mountain Coffee Roasters is actually one that right now, and I know there was negative press about recalls of things of that nature, but I think even with last week's monster sell-off, 2% or so, or 1.5% in the S&Ps, whatever, even with that, you can tell that here this stock defied gravity, so to speak. It did a counter market move. The market went down and this stock did not really get decimated, right? So that to me is a pretty strong indication. One stock I just wanted to go over in detail of how to trade that stock along the methodology that we use. Pullbacks in the 122, so we set an alert in the market. So I will do that for us right now for this week. So I'm going to set an alert. And I'm going to go price alert. Green Mountain Coffee. If price gets down to I'm going to give it just a 123.10 just to set me alert, right? And just it's not telling me to get into the trade, but I'm also going to set a if a trade gets up to 133 level, I'm going to go 132 just to give me kind of like an early warning sign. You know, it doesn't tell me that I need to take action on it. It's setting it, reminding me to take a look at it. Okay, so we do have Green Mountain Coffee Roasters. We've already set that alert, and I'll just click off of there. So Green Mountain Coffee Roasters, one, if I'm looking for a stock in the retail sector that, you know, one of the things that I like about that is it's in the retail sector, it has strong seasonality, and it's not a stock that's going to be influenced by the Federal Reserve raising rates a 1/4 or 0.5%. It's going to be dictated on, you know, more people going back to work and more people drinking coffee, and this is that time where we do see coffee sales increase, and it makes sense to me. So with that said, whether or not that this goes ballistic or not, what we might want to do is also look for some option strategies there, like if the market gets down to that on a daily basis, right? If we do trade back down to the 122, 120 area, right, and it holds, and we generate a daily buy signal, so it's in a weekly buy mode, it pulls back a little bit, and then it takes off. So Fibonacci support and resistance traders would say, well, you know, let's take a look, and you know, maybe this is a lot of more work than we need, but I'm going to take a low high swing and say, gee, a 38% retracement is 122, and 67, about a buck lower, is my monthly pivot, and you know, right in here is my quarterly support, which is closer to the 50% correction of that last leg. So if the market is going to respect the seasonal upturn, I would suggest that the market's most likely not going to get down in this into below that green area. So we now know that if the market dips down there, perhaps if we even test into that level, we have two things to look for. One, a PPS buy signal, a high closed doji setup, or let's see if the market breaks out above 132, and maybe that was the correction, right? It wasn't that big. Other news and other stocks that are similar in nature to this is Starbucks, SPUX, and we tweeted out this a while ago. In fact, last week we even did a credit call spread, got filled at 85 cents. So with Starbucks, we've lost a little theta. You've gotten down here. We made mention that even with Starbucks having a seasonal trend, this is one market that's already kind of had a major breakout. So the fact that we're at resistance and not support, this could be one that perhaps just kind of lingers a little bit. And for those that did the trade with me last week and took in that 85 cents, you know, we have an opportunity of taking damn close to, like, just in a few short period days, a small little profit on that, which I would recommend. So that is our a couple stocks that what I'm looking at, and why I'm looking at specific indicators going forward for the next couple days. So if we do see, again, it's not how a market opens, it's how a market closes that's important. So this morning, in summary, we've taken a temperature look in a quick way of what the market's revealing as far as who's in control of the market. I don't know if a 2% correction is enough to get a lot of the small speculators out, but let's face it, if you were long from 21 in the S&Ps, 2105 on average, and the market dropped all the way to 21 70. I'm kind of thinking, or slightly lower. It would be a tough trade to maintain, you know, that type of financing to live through, right? As a position trader. So the fact is, I think that two things are going to happen. We're either going to see some support coming in here because we did reach that 2%. The open interest level did suggest that the market was, it wouldn't see a tremendous sell-off. And, now as you notice that we may have overstretched the imagination of what bond prices did, what gold prices did, but that's still some significant technical damage. So we need to understand that the markets, gold and bonds, sold off because the world thinks the Fed is going to act in raising rates. What we need to do is say what stocks won't be as, what stocks won't have as much exposure to that. And if retail sales Thursday come out and show some strong performance, I think that, Green Mountain Coffee Roasters is a good stock to look at. We will have others this week, but I wanted it on Monday's planning and scanning. The first thing we'd like to do is say, okay, what levels in the S&Ps can I be looking for? What market conditions can I be looking for, right? So I think we've discussed that in detail, beating it up with the ugly sticks, so to speak. I mean, we got 2060. We saw that in the markets. Might be, somewhere in here we get some choppiness. We'll watch how the market responds at the end of the day. And that's what I would really look for. If you are in some put options here and you did not take anything off the table, don't be a pig and be greedy. Take something off the table. I don't see this as a whale of in the neighborhood of a 10 or 20% correction. It did hit it hit the minimum correction level that we discussed last week in this trading room. So, again, the market, even though I might not have been here, we tried to tweet some stuff out to you guys, and that's what we discussed last week, and so I'm just following up with that. Now, for anyone that's visiting this week that has no clue what we were talking about, stick around. It's a great little indication and a great report. I hopefully covered that. We don't take that many requests from people. So John So, you want me to know about Apple, we'll take a look at that at time. With the market opening right now, people are trying to figure out what's going on with this market scenario. I like Apple, so I'll succumb to your request, so to speak. But generally, we look for specific ideas in the market that have a good risk-reward ratio, not what people are in already, right? Generally, I find out if someone's asking me about a stock, it's because it ain't because they're making money in it, all right? Because everyone wants to know if they're in a stock, they might be losing. But with Apple, Apple's a situation that it had quarterly pivot resistance at 133. And everyone's going to make a big deal about the watch. And I remember the Seiko watch. I'm not sure I want to give up and I don't think a lot of people will give up I'm not a big fan of the Apple Watch there. How about that? And I don't know if that's going to be the turning point for Apple. Is it a pop or a flop? And there's a lot of new kids out there that are, I don't know what the pricing point is. I just don't know if I'm going to put on an Apple Watch to look cool versus changing up. And I don't think a lot of women out there in the world would, say to their husbands, hey, I brought you an Apple Watch, or would you like a Cartier or a Rolex? So, I mean, maybe we need to ask that question to, our wives. Would you prefer the Apple Watch or a new Rolex or a Cartier? What would you like, sweetie? So we'll find out. I mean, especially what the price range is for that. But as far as the technicals, and to answer your question, as far as the technicals are concerned, the market is coming near support, which is last week it held pretty well at near the 126 level. I got support right there. And unless we get a weekly sell signal, which we did not generate, it's still in a weekly buy. It's a little overstretched, and I see a range in this market which could last between the upside of 133 and support at 120. Now, that's a $13 range. Let me take a look at it and share it with you on a chart, okay, John? So you see this directly. So on a weekly chart, we saw a little bit of a pullback. This is that quarterly, and this is the end of the quarter, by the way. This is the quarterly pivot resistance, right? This is the weekly moving average. I don't have a weekly sell signal to indicate that the market is got an official sell mode. So what I would suggest is that I see a little upturn, but the market doesn't do anything from a seasonal perspective. So that's why I say I think the market might be in a little bit of a range in the near term. And so looking at the longer term support, which we have an old high, swing high, which might act as support near, as you can tell, 120, it's 119.28 on the high, and this 133 quarterly pivot resistance. When I change this to a monthly chart real quick, note what my monthly moving averages, which have nothing to do with this price high over there. Look at the blue line, right? So you have monthly moving average support. How good is that monthly moving average support? Well, a lot of times when the market goes down, it acts as a significant resistance, and then when the market moves up, it's acted as support in the past. So I must say at least the first test down near 120 might behave. Okay? So I don't see it as a non-event. The media made it a big event. The media sometimes does not make smart commentaries. I do know that they're making a big deal about all the stocks since 2009 that got delisted from the Dow have performed well. That is the most idiotic statement I've ever seen. Now, how many people have made or have read that analysis? That stocks that have left the Dow have done well in the last 4 years. How many people have read that? Could you reply? So, holy moly. So we got flipping with yes and yes and yes and yes and yes. So what has the stock market done since 2009? I mean, come on, really? Is that your analysis? How about how many stocks have been delisted from the Dow since 1929? And what have their performance been since they've been delisted? Now that would be a better question. But you don't tell me what is this, every time a stock gets delisted from the Dow, it's done well since 2009. That's the most insane, stupidest analysis I've ever seen. And the reason is because, guys, ladies, gentlemen, you got to admit, the media is milking us to thinking that this is a great thing. What has the stock market done, SPY? So this is the spiders, S&Ps. Well, since 2009, unless you went bankrupt and your name was maybe WorldCom or Enron, since the low of 2009, you know, perhaps maybe you've done well. Just because you were delisted does not, you know, doesn't to me mean a whole lot. That's all. So, you know, when you add Nike and you say, okay, well, in 2009, and that was a split, so that's not even a fair thing to assess. You know, when they added it to the Dow, Nike, when you look at AT&T, which I'm sure when you take a look at AT&T and you say, well, it was delisted and it did well. Relative to Nike, I don't think so. Right? I don't think so. So I think that the media has played people. That's all. And continues to play you. And I think what you need to do is trade as I teach based on a set of facts. Because if we trade on a set of facts, I think everyone will do better. When you trade on the media had you believe, as we've gone over many, many, many times, the media had you believe that no one was buying energy stocks in January. And yet when we take a look at Valero, or when we were taking trades, I mean, in January, by the way, in mid-January, what happened? Valero bottomed out, and when Carl Icahn famously came on CNBC, I think it was on the 28th, you know, and people were claiming, I'm not buying energy stocks. I'm not exposed to energy stocks. We don't want to be in energy stocks, right? I mean, it was only up 15% since that time, right? If that's not enough, PSX, Phillips 66, is the same thing. It bottoms out on the 14th. You're telling me at Person's Pivot Support, you're telling me that they paraded analyst after analyst after fund manager saying they were not exposed to energy stocks, when even the simplest stock like Schlumberger, SLB, also bottomed on the 14th. So if the people were saying they weren't buying energy stocks in January, and energy stocks rose between 10 and 20%, okay? I mean, Schlumberger was only up 16% in that time period. You got to be telling me someone missed 10, 20% moves in the stock market or in individual sectors of stocks? So even ConocoPhillips, one that we took in this room based on risk reward parameters. I mean, there is another one that this area, I mean, up almost 15%. So anyway, then let's look at how many of you have been listening to the news. If you remember, just 4 weeks ago, weren't you told that, you know, that the market was going to crash and burn? On January 28th, this thing looks ugly, and then everyone was looking to sell on February 2nd. That was February 2nd right there. And if you had sold on February 2nd right there, I mean, people, we live for a stock market move. That's 7%. That's a great year. But that was a 7% move in a very short order. So if you listen to the media, good luck to you this year. That's all I got to say. So when the media says about Apple and sensationalizes it, I think what we need to do is learn to maybe listen to the news, but do our own fact-finding basis. All right? So when the media says, hey, stocks do well when they're listed and blah, 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 or it's good for them when they get delisted and blah, 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 go look at the environment. That's what happened. And look at that small sampling. That was curve fitting at its best. And I think that I'm glad that you guys were here. I'm glad I took the time to answer that question. And I thank John So for asking the question. That was very brave of you. And I do encourage questions on open house days and weeks. It's, you know, it may bog us down with things. But I think it's very interesting that if we trade based on facts, guys and girls, you'll do a little bit better by doing your own research. Don't be lazy about it. It's your money. If money was easy to come by, then you know, then that's another story. But don't get lazy with doing your research in the marketplace. That's what I would suggest. Okay. So right now, we're going to stop and take a quick little breather, and I'm going to reset our charts and get into discussing a few levels for day traders. And day traders in this market, as we start to look at what the big boys are doing, we have some decent volatility, but look what I have on my screen. First thing is, I've got, based on this intraday volatility, I have 3-minute charts at the top. I have 15-minute charts in the middle. I have my 60-minute time frames at the bottom. I have, in this column, the E-mini S&Ps. In this column, the NASDAQ 100. In this column, the Dow Jones Industrial Average. And then finally, in this column, the Russell 2000. It represents growth, small cap, high dividend yield Dow 30 stocks. Every Dow 30 stock, as everyone knows, is in the S&Ps and the NASDAQ 100. Looking at my analysis, the NASDAQ 100 is probably the weakest of sectors from the AD line analysis, from the breadth analysis. Okay, so I did want to point that one out to everybody. From an advanced decline analysis, the Qs, the NASDAQ 100 is one of the weakest, or more of a weakening sector. It suggests that we might see a little bit of rotation out of certain areas of the NASDAQ relative to other performing sectors. So this is where it gets confusing for a lot of people, because you've got to admit, this has been some people agree that this has been a confusing market. And it depends on whatever you're in. We've got moves coming, and different sectors influences on an index. We don't just see sector rotation, but we've seen index rotation, as I've been teaching and sharing. What do I mean by that? We've seen blue chip high dividend yield stocks in 2014, namely the Dow, so that people could get that double whammy of a high dividend yield return of their investment, outperform relative to the small cap Russell. However, in 2013, it was the small cap Russell that exploded to the upside. 2014, the Russell was in a trading range. Then with the NASDAQ, you had a few tech names pop, but you had one sector that went parabolic, which is biotech. And in the NASDAQ 100, it has a strong weighting of biotech names. And in March, it's kind of funny. As much as I may have been a day early in a 1% loss, the utility sector, actually, this is like one of the best times of the year to buy utility stocks, right? This is the worst time of year to buy biotech. And we are seeing biotech, which last week we were a little concerned because we saw the market kind of rally, and then we see the market pulling back right now. And last week's rally in the biotech sector was, quite frankly, on a significant bearish divergence area level of volume. So I still have my eye on looking at the biotech. The IBB is the sector ETF that we're watching, and the biotech is down, you know, a couple bucks today. It didn't hold above that 40 level or 45 level for very long. When I look at specific stocks to buy for this week, one thing I want to do is I want to see, well, do we got more selling coming? And so I want to kind of take a gauge before I get and put on a trade. I don't personally like to put on a trade just to trade. I like to put a position on that I think I can make money on. So I don't like the phrase trade often and trade small, because I like to trade consistent with my positions. I like to be more directional in nature, and I like to look for setups, which means I don't talk all the time. I look for high probability setups, and we get them in this room a lot. So, in any event, if you allow us a couple minutes, I'll be right back with everyone. So far, we're not really going very far in the marketplace. And when I take a look at a breakdown of stocks and sectors, I have a specific way of doing that, which is something that we also utilize in this trading room using TradeStation for market analytics. I also use my scanning features, and many of you are Thinkorswim clients, and we'll share with you that in just a minute as well. How to scan for buy setups, and how we get not just a temperature of the market by whether a sector's red like the heat map, but whether or not a sector goes with a PPS buy signal or sell signal, and how many stocks in that sector have generated buy and sell signals. That gives us a little bit better, more powerful gauge in the market. All right. So today you'll note that we have more of a recovery in the Dow component stocks, right? Dow component stocks, if you take a look, I mean, it's the opposite. Dow's up, NASDAQ's down. So the NASDAQ's getting a little beaten here, and mostly because of the, and even look at the volume. Look at the direction of the volume indicator on the NASDAQ. The volume level indicator here is pointing down. The volume level on the Dow is pointing up. That's either two things would make that happen, right? Either people feel that high dividend yielding stocks, which are interest rate sensitive, are of value, or maybe perhaps some of the component sectors in the NASDAQ, namely some tech as well as biotech names, are maybe a little overbought. So as a trade setup for day traders, this is a 3-minute time frame, and this is the S&Ps. So when I look at daily pivots, I got to say, well, what was Friday's range like? And it was dynamic, correct? So if I look at Friday's range and I try to utilize today's daily pivots, yesterday or Friday was an abnormally long range day, which is going to give me maybe a false reading of what the potential support and resistance levels are within using daily pivots. So on abnormally wide range days, we don't trust the daily pivot the next day, and the opposite is true for narrow range days. Last week, this red line, it was a level that was acting as resistance, right? And now I'd have to say what would act as resistance today. So looking at the market, we had this supporting low in here on a 60-minute. It acted as support for, I think, the first hour of the trade, and then it didn't hold. So now I look at the market and I go, well, if I'm going to get long this market, right, I'm going to have to see a little bit better volume come into the game, number one. And number two, I want to see from a buyer's perspective. I'll tell you where I would be interested, as I've already pointed out. I would like to see the market, how it responds down here in the 1260 handle, number one. So from a intraday perspective, between 1260, let's call it, I don't want to, every time I say 1260, it's a little bit lower, but between 1260 and 1256, and I'll put a line on there. If the market gets somewhere into that black line, that green level of support, which I usually leave this on the charts. This was based on this morning's coverage of where we had that old high, you know, that support element in the marketplace. So I would be trusting that 1260, 1256 level, number one. Number two, for a resistance level, I firmly believe that the pivot near this 1280 will act initially as resistance. So let me go back and share with you one other element. This is a last conditional change. The high is 76.75. That candle right there. You will note if I drew a little simple line across that level, it's almost acting as resistance right now. So this red line is resistance. So here's the key. Let's say I'm wrong. I'm dead wrong, and the market bottomed out already. It had a 60-minute high close doji. It bottomed out already. The only problem I have with that 60-minute high close doji, there's no volume behind it. And we're starting to get into the overbought territory, and we're in this, what I call the red level of resistance zone, okay? So wouldn't it make sense that the market, even on Friday, let's go down memory lane. I mean, this red zone acted as a little bit of support, but once it closed, this candle right there, which was 1 o'clock, once it came back from lunch, 1 o'clock, and the market closed, it acted as resistance at the 2 o'clock hour it acted as resistance at the 3 o'clock hour, the 4 o'clock hour. It acted as resistance last night. And so to me, an area, a powerful area of, if it overcomes resistance to be a buyer, is I'm a buyer above the daily pivot if it can clear and close over 2080 again. Does that make sense, everybody? So this means short-term scalping in between here, or maybe some low-risk sell setups on a short-term up against. And so for traders who are liking to day trade and are liking to day trade on a shorter term time frame, I would be selling up against this 76 to 80 area on short-term triggers on PPS. On the other side of the coin, I'm be interested to see what the support, how the market behaves if it comes back down. If, again, keyword, if today or tomorrow we have an opportunity to see how the market responds down here, if the market gets down here. So if the market does get down here and there's no buying behind the sell-off, and then you get a nice shorter term buy setup tomorrow or today, I'm a buyer. Later, probably tomorrow. The reason is if the market got down here towards the close, I wouldn't want to be a buyer. End of story. So I'm a seller up against resistance first. If it clears resistance, I would be a buyer because it cleared the resistance. And that's what I see on the 60-minute chart patterns. And I'll leave that, as I always do, for our traders. The Dow is kind of seeing a little bit of a stronger breakout mode, which, you know, how many times have we seen the Dow be the leader of the market? It's not one of the best setups, but the Russell is also coming up close to its daily pivot, and it must suggest that here we have our NASDAQ effect. The weakening effect of the NASDAQ is what's weighing in on the S&P. So you ask yourself, well, what's in the NASDAQ that would cause this weakening effect? And what it is biotech. Some of the technology stocks, Akamai, Microsoft, even Cisco, we're starting to see some recovery in some of those names. So on Friday, I generated Friday's price action in the S&P 500, 70 low close doji triggers, 1 high close doji. The high close doji that was triggered, the only stock that triggered a daily high close doji in the S&P 500 on Friday was Bank America. Most of the stocks that generated a daily low close doji did not, even though it's a low close doji, did not meet the criteria. In other words, it wasn't a low close doji after a huge uptrend. It'd been already in a downtrend. So when I take a look at names like Activist, ACT, Archer Daniels Midland, or you take a look at Archer Daniels Midland yourself, the stock symbol's ADM. I mean, it's not a low close doji because the market's already been in a downturn. Tomorrow, I believe it's tomorrow, and we'll have our what we also generally put out as a weekly thoughts and observation. It's, believe it or not, 3/4 of the way done. My thought process was the fact that on Tuesday we have the USDA crop production report out at 12 p.m. Eastern Standard Time. So a name like when I look at Archer Daniels Midland, which was a $53 or $54 stock 3-4 months ago, and it's now a $46 stock, you know, I don't suggest that this this is a stock that certainly has strong seasonality to go up this time of year. I would wait after the USDA report to see if there's any negativity there that comes in. Looking at a utility name like Ameren, AEE. AEE got smacked down on Thursday, Friday, and now today has a little bit of follow-through weakness. But I would look at this, and I would be rescanning for daily buy signals in the utility sector, especially like when we get to AEE as we near the $40. Bed Bath & Beyond, BBBY. We covered this in the room 2 weeks ago, right? And we said, hey, Bed Bath & Beyond, this is a name that we wanted to hopefully see get closer to the $70 level. It's trading at $73.64 right now, Bed Bath & Beyond. It actually has terrific looking longer term volume to the upside, dictating a potential continuation to the upside. So besides Green Mountain Coffee Roasters, Bed Bath & Beyond, by the way, if you're looking for bullish setups in the consumer discretionary, do plan to see Green Mountain Coffee Roasters and Bed Bath & Beyond on that list. People in the room aren't familiar with what I'm referring to. I don't mind if someone wanted to take a look in the document tab. Last week, due to the fact that we were in New York, I'll just give like a little heads up. It's posted on our website. We have the weekly positive thoughts. So visitors, when I finish it, you'll have access to it. Basically, I give my market thoughts of what I'm looking at in the market. Number one, what we track like the knobs spread, right? Why we use a 1-to-1, and I know that the exchange likes to give credit for a 3-to-2 or a 1-to-2 ratio, but I still do it the old way of 1-to-1. That way I can track the charting patterns, right? But in any event, we do give finer points of the market. As you can see, a couple weeks ago, or actually this was on February 9th, you know, that little 10-day moving average technique that I shared with you guys, I use that. You'll see that, the McClellan oscillator reading, which is negative, which suggests oversold. That's why I'm not telling people to, if you haven't taken a profit and you bought some puts, take something off the table, at least half immediately. I don't see this market as a 20%, 10% correction. I think we might jock around a little bit and be positioned for some upside. That's my stance here, okay? But in this, we talk about bullish setups, what stocks look good, what those stocks are, and what sector they're in, okay? Bearish setups, what stocks and sectors like biotech, seasonal spreads. These were all spreads that we've put on, and pretty much almost every single spread has done phenomenally well. This was an interesting spread for those that are visiting. March Canadian, you buy March Canadian or buy March Australian, and you sell the Swiss franc in terms of futures against it. Now, we all know what happened with the Swiss bank and the move that occurred in the Swiss franc. The funny thing is this spread, you get in it year in and year out, and it happened, you get into the spread after the Swiss bank made their move, which made this spread more profitable for people. Since crude oil bottomed, Canadian is more of a resource valued currency dollar, so to speak, and Australian as increase in productivity as Australian's biggest #1 client is China. So you had either one of those two. Then there was the copper spread, which we took a profit on, and then you still have, this is a longer term buy bean sell meal with tomorrow's USDA report that may cause some adjustment of that spread. Be aware of it. That's why I'm mentioning it. Along with soybeans, you buy beans, sell corn. This is a longer term, and the one that we are still interested in is buying hog, selling cattle. And then, of course, we put out reports and earnings, and that's generally out every week. All right? You'll find it here when we put that out in our, we post that on our blog site. We've done that for over a year and a half. If you're not familiar where it is, if you go to our home page, so I'll take you to the home page of Perston's Planets, and you go over here to blog, and you can go and you can see again the different weekly observations. So last week it didn't was posted because of the New York Traders Expo, and this week I'm tardy because of being out in California. But we will have that out there, and the two names, at least in consumer discretionary, that I'm looking for buys in for this week are Green Mountain Coffee Roaster and Bed Bath & Beyond. So, needless to say, David Kushner wants to know, do we do earnings trades? I'll let the room answer that. If you can't see their answers, yes, we do earning trades in here. We do a lot of earning trades that we see high probabilities to. So we do a lot of different things here. We do spreads, we do stocks, we do options. We look for day trade opportunities. With that said, bear with me. I'll be right back.